Good evening, everyone. So let's start our today's webinar on investing in small cap and mid cap stock. Okay, most of us who are actually actively investing into capital market or trading or maybe as a long-term investor must have heard about small cap and mid cap stock, right? Definitely, a lot of us do recommend about being a cautious or taking a precautions before you actually investing, right? So that's what we are going to learn in this webinar. But before we actually start the session, let's understand or let me introduce myself first, and then probably we can take it forward. So by profession, I'm an investment professional with a more than 15 years of experience of working in private and public market. I have earlier worked with a lot of venture capital funds. By profession or by trade, I'm an engineer from VJTI, followed by MBA in finance, and then I'm a CFA charter holder for more than a decade. So let me introduce you about NISM, which is a capacity building initiative of a SBI. NISM stands for National Institute of Securities Market, which is a public trust established by Securities and Board of India, SEBI, which is we all know is a regulator of securities market in India. The NISM or the institute carries out a wide range of capacity building initiatives or activities at a various level with the objective of enhancing the quality standards in security market. So let's understand what would be the key takeaway from this webinar. The first and the foremost objective is to demystify what is mid cap and small cap and the various risks associated of investing into this company. Understanding the what are the risks involved into mid cap and small cap, and of course higher risk entails a higher reward as well. So let's understand that, and also let's understand the guide of smart investing, which will help us in navigating the investments into small cap and mid cap and will reduce our risk or exposure to this section of a capital market. So let's understand first what are mid cap and small cap stocks. Of course, there are a lot of people who identify small cap and mid cap by the market capitalization of those individual stocks. But unfortunately, there is no fixed criteria as in when we talk about mid cap stock, is it a companies above 5,000, about 2,000 crore or about 10,000 crore can be considered as a mid cap. That's why SEBI came out with the guidelines which have been already accepted or adopted by AMFI, the Association of Mutual Funds in India, and then they come out with a list of all the companies and they segregate them into a large cap, mid cap, and small cap based on a market capitalization of those individual company. So by default, the top 100 companies by market capitalization will be termed or ranked as a large cap. The next 150 after 100 companies, which means the companies which are being ranked from 101 to 250 by market capitalization will be considered as a mid cap. And all the companies which fall below the market capitalization of top 20, 250 company, which means the companies about 251st rank will be considered as a small cap investment. This categorization has been reviewed and gets updated on a half yearly basis. So AMFI carries out this complete exercise with the help of or with the data provided by the SEBI. But question is, where will you get this list? Of course, AMFI do release this list on a frequently basis, but you can also identify this kind of stock based on a various indices formed by NSE and BSE on this cap, on this company. So if you look at a Nifty or NSE stock exchange, NSE have a series of mid-cap indices, which is a Nifty mid-cap 50, which means a top mid-cap 50 companies would be part of this Nifty mid-cap 50. Nifty mid-cap 100 stands for a top 100 companies which belongs to mid-cap category. And 150 is a complete universe of a mid-cap companies. Similarly, BSE do have indices like BSE mid-cap and BSE small cap. Nifty also have a lot of indices on a small cap, which is Nifty small cap 50, 100 and 250, which means that all companies which are being ranked from 251 to 300 will be part of a Nifty small cap 50. Next 100 company from 251 to 350 will be part of a Nifty small cap, and companies which are being ranked from 251 to 500 will be part of a Nifty small cap 5 or Nifty small cap 250. So that's how all these indices are being formed by NSE and BSE, and people can use these indices to identify the small cap and mid cap stocks. But first of all, let's understand why investors are attracted to this stock and why are they so curious. Of course, it can be clearly identified considering that we have a more than 400 participants who are actually attending this webinar, which clearly tells you that investors are attracted to small cap and mid cap. So let's understand why are they interested. First of all, potential for high returns. We do hear a lot of messages that, okay, if you would have invested 10,000 rupees in 1995 in Infosys or Wipro or maybe any other tech company, by now you would have become a crorepati. Yes, that's a fact. If you would have invested 10,000 crore rupees in uh, Infosys or Wipro in 95, it would have become a crorepati right now. But we are forgetting that at that time, Infosys, Wipro was a small cap or even a mid cap companies, right? And of course, they do offer a higher return compared to other large cap, where is Reliance or L&T. That's why a lot of investors looking for a higher return do consider the small cap or mid cap as a good pool of a ideal candidate to become a next Reliance or to become a next Infosys or L&T. That's why, considering the higher potential offered by the small cap and mid cap, people are interested in investing into this. And the major reason for that is the faster earning growth vis-a-vis large cap. If we look at a large cap like a L&T or Reliance Industry, of course they do grow, but they are already into a matured phase wherein they grow in a single digit, wherein a small cap and mid cap companies which are not a leader in their own segment, maybe a small company, they do offer or they do grow in a double digit, and hence considering that higher earning growth potential of those company, they do offer a higher return or higher appreciation in the capital market. Second thing, earlier stage in business life cycle. As we all know, when the companies are young, they have a large potential to grow considering the smaller base that they carry. That's why if company is in earlier stage, they do attract a lot of investors with a higher risk appetite. But we'll have to also consider that since they are into earlier stage, apart from offering a higher return, they are also exposed to higher risk that they might even shut down their business or might suscept to a competition from another big players. Market inefficiency. We'll have to understand that most of the analysts or large mutual funds or large institutional investors, they do invest into large cap, and that's why most of the top companies or large cap do have an analyst coverage offered by various broking house. That's why they are getting price price closer to its fair market value or fair price. But in case of large cap and small cap, these companies do not have any kind of analyst coverage. That's why the market price which is at they are available in the market may not depict the true potential that the business carry, and there are chances they could be undervalued and do offer a higher price appreciation. That's why, because of this market inefficiency, a lot of investors are attracted to these stocks. But the biggest I would say that skill set that investor need to have to price that particular stock accordingly, so that you can clearly say that they are undervalued. if your assumption based on which you're valuing at a certain price, right, are wrong, then you might get into a value trap. Corporate turnouts. Lot of smaller firms do get restructured faster, and then post that they do offer a boost performance. A very good example of such stocks could be a Suzlon, which was at one point of time was trading in three digits or at a much more higher valuation, but because of the corporate governance issue or because of the corporate debt restructuring, that stock went into a single digit or lower double digit. But post corporate turnout or post corporate restructuring, again it's heading back to a three digit price tag, which do offer a kind of higher appreciation based on this corporate turnaround. Similarly, if a smaller companies do get acquired by large players, and they are ideal potential acquisition target, because of which the price appreciation that they can offer would be higher than any other stock. So these are the major reasons because of which individual investors are attracted to this stock. But the most of the common reason is a higher price appreciation that they offer to an investor. I understand that a lot of you guys do have a question. So at the end of this question, we will try to answer your all questions. But when it offers a higher price appreciation or return, there is also a flip side to this rosy picture or rosy story, right? And these stocks or these companies are risky as well. So let's understand what is the flip side and why these stocks are risky. Okay, the major reason is a price volatility. Considering a lower base or a lower I would say that institutional investors, the price volatility in these stocks are much more higher compared to a large cap stock. Generally, when you see a large cap like L&T, banks like SBI, ICICI, or Reliance, or maybe L&T, right? On a daily basis, they do trade in a range of 1 to 2% on a normal day. But if we look at a small cap and mid cap, the prices or the volatility are so high, the prices guided in a band of a 5 to 10%, which is a quite common. Okay. And the major reason is a low liquidity. Considering that, okay, lot of investors do not own them, the investor base is quite thin, the prices do get appreciated or drop drastically because of any positive or negative market news. Even they are susceptible to any kind of rumors because of the lower investor base. Again, since there are not enough investor base, it does not offer a higher liquidity. If I look at any institutional investor, whether it's of FII or mutual fund, they do look for a liquidity so that it becomes very easier for them to enter into a stock and exit the stock. But because of the lower liquidity, they generally avoid small cap and mid cap because of the higher transaction cost. And because of the lower liquidity, the bid and ask spread, which is generally measured in impact cost, is also on a higher side. And all these costs lead to a higher transaction cost for FIs and mutual fund. And someone like a mutual fund who generally do invest amount in crores, even a 5 bips or 10 bips do matter a lot. That's why they are generally they refrain from investing into any low liquidity stocks. Simultaneously, if I look at this kind of small cap or mid cap companies, another issue along with these companies is a financial transparency. Since these companies are small cap and mid cap, not necessarily all of them do have a big four like a ENV, Daylight, or any other reputed statutory auditor as an auditor on the company. Lot of times the financial transparency which the company needs to maintain with respect to a SEBI guidelines or disclosure agreements with BSE, NSE, they might not adhere to this kind of guidelines, leading to lot of financial transparency or issue with the corporate governance. That's why even independent directors or lot of mutual fund avoid buying this kind of companies. Similarly, corporate governance is one of the major issues with the small cap and mid cap companies. We have seen example or latest example like a Gensol or a lot of other companies which being run by a board with a lower corporate governance standards. And because of all these issue, the price dropped significantly, losing a crores and crores of money for a retail and other investors as well. That's why these all issues needs to be considered before investing into a small cap and mid cap. To continue the same issue, if I look at a generally small cap and mid cap company, they are being driven by a set of one or two key promoters who are important for the successful running of a business. When they become a large cap or a kind of a big institution, then they generally do have a kind of corporate structure wherein a large team take care of day-to-day business and the promoter may not be involved into day-to-day operations of a company, and everything is process driven and driven by company. But unfortunately, in case of a small cap and a mid cap companies, still a lot of decisions being taken by a promoter. Failure or exit of leadership can collapse stop, and any exit of those promoters or maybe a major KMP could result into stock price drop significantly on the announcement of a departure of that KMP. That's why it's very important to understand the company in which you want to invest. Even if it's a small cap or mid cap, it's very important to understand whether the business is being institutionalized, is it being driven still by a promoter, or they do have a corporate structure wherein they have a enough qualified team of a people who can run that business smoothly without the dependence on a promoter or a top KMP. Higher debt level is another major reason. Generally all these small companies or mid cap company do carry a debt on their balance sheet which is unsustainable in the long term, and any kind of negative down cycle in their business could affect them significantly, increasing their interest cost, and in case of that they might even close down their business because of the unsustainable debt levels that they are having. And most of these companies do get affected negatively by any interest rate changes, a currency shift, inflation, and policy market. We all know that the global market is going through turmoil because of the tariffs announced by the US government. So this kind of decisions do affect any small cap and mid cap companies which are heavily dependent on an export business. They know that okay, the margins that they are surviving on, or the segment which they are serving to, right, might not be the customer in future if tariffs starts implemented or tariffs start eating away their margin. So all the global macroeconomic sensitivity do offer or do affect their business. Similarly, operational fragility. Generally, all these small cap and mid cap companies are a particular geographic specific, and they do have a customer base in and around a particular geography. To give you an example, suppose if we consider a cement giant like Ultratech or ACC, they do have plant across India and they do serve various markets of India by providing cement to the all of India. Okay. Compared to that, if we compare any other local cement company, such as Sri Cement or Sagar Cement or Murudeshwar Cement, any other stock company which is listed, they do have a local geographic presence and they do serve only a small pocket of India. So any kind of business that affects a local market will affect the negatively the performance of this company. Similarly, if I look at a big giant, they do have a multiple revenue stream, a multiple product. So take an example of ACC Cement or Ultratech. They do offer a multiple cement products over a period. They do offer a RMC. They do offer a white cement. They do offer a gray cement. But that may not be the case with a small cap and mid cap company. So they are generally or heavily dependent on a one revenue stream or one product. So any negative impact on that particular product would affect the revenue of a company significantly. So that's why if I look at the business of a small cap and mid cap, they are more volatile, because of which the prices of those companies are volatile. So before you actually consider investing into small cap and mid cap, you have to first understand whether the business or the company is on a solid ground or not. And we cannot assume just by looking at it that okay, it could become a next Infosys or next Wipro. So we can't be so sure of. That's why, because of all these reasons, it's advisable that retail investor should not invest into a small cap or mid cap companies directly. And the one of the, let's understand what are the reasons. First, inadequate research resources. We have all seen that if you want to carry out a research on this small cap or mid cap company, first of all, you need to have access to very good database through which you can understand the business of a company. So take an example, if I compare it with any other institutional investor like mutual fund or maybe even FI, they do have access to various research resources such as Bloomberg Terminal, Reuters Access. Apart from them, they do have access to a lot of these broking house which do cover this mid cap or small cap. But that these resources may not be easily available for a retail investor and they cannot afford to have this. Second thing, we'll have to understand all these institutional investors or mutual fund, that's their daily job. They are involved into market activities on a daily basis. Not necessarily that would be the case of a retail investor. Retail investor might be working in a pharma company, might be working as a corporate lawyer or maybe a doctor by profession. So they generally do not have that kind of resources in terms of research availability or in terms of resources like a time to carry out this research. Similarly, generally, investors or retail investors do have a biases like herd mentality. They generally invest into all these small cap and mid cap companies based on a recommendation of maybe either their friend or family or their known alliances, right? And generally, they do get into a panic mode the moment price starts falling down because they do not have the basis of investing actually in this kind of company. They don't understand whether the company is good or bad. Does it have a small or does it have a solid base? And what is the reason for this kind of panic selling? That's why they are fixated only to one aspect of investing, is just a price. So they know the price at which they bought it, and the moment the price starts falling below that, they get into panic mode and they start selling because they don't know anything about a company, promoter, whether the potential of the business is good or bad. Another reason is inability to absorb losses. Generally, any investor who get into capital market do have a aspiration to create a wealth, and that's why they are investing. But we'll have to understand the wealth gets created over a period in long terms by remaining invested. And that's why if an investor doesn't have a higher risk appetite or ability to afford losses, they should not invest into small cap or mid cap stock. Small cap investments require a demand or require a patience and conviction, right? And probably you can have a patience, but conviction comes with the expertise to understand the business and the potential of that business. See, we are forgetting that, okay, people would expect that if they would have invested 10,000 in 1995 in Wipro or Infosys, they would have become a crorepati now. So we are talking about a period of 2 to 3 decades and not a short-term investment of 2 to 5 years, right? So in order to create that kind of wealth, you have to remain patient, and first of all, you have to have that kind of conviction in the company in you are invested. Emotional volatility, watching large drawdowns, considering that this small cap and mid cap are susceptible to higher gyration in terms of their prices, you'll have to understand that you should only invest into this company if you can absorb losses, and you can ignore or emotional, you should refrain from any kind of decision making if you are emotionally attached to that particular stock or company. That's why you should not make any decision when you are emotionally affected by the large drawdown. So now the question is that now we understand the various risks associated with these companies and the investment into small cap and mid cap. The question is how to manage the risk and what are the best practices. Okay. So first of all, when we are investing into a small cap and mid cap, we should invest across different sectors and different cap size. So when I say different cap size, it's a market capitalization. We should not invest, or we should not have a higher allocation to small cap and mid cap. Always you should have a higher allocation to large cap, and maybe a small cap and mid cap should be allotted a small portion of money. Another best practice or option of having an exposure to small cap or mid cap is through mutual fund or exchange traded fund. Because first of all, the schemes, whether it's an ETF or mutual fund, right, are professionally managed by an individual who are daily involved into the business. They are not emotionally attached, and they understand the various risks, and they know how to manage those risks. That's why investing through mutual fund or ETF do carry a lower risk than directly owning this small cap and mid cap. That's why a retail investor ideally should prefer having exposure to mid cap or small cap through a mutual fund. Of course, you can carry out your own research if you have time and resources, research resources available. You should carry out your own research about the revenue trends of a company, the promoter, the debt level that company have. And if you are confident and if you have that kind of conviction, then probably you can take that kind of exposure to that company post carrying out your own research. Generally, I would recommend avoid penning stocks, which are, when I say penny stocks, stocks which are small in denomination, in a single digit or double digit, which can be easily managed by any broker or manipulated by any individual with a low credibility of a business. So you should avoid, because they do carry the highest price risk. And anyway, as I mentioned earlier, it's always better to limit your exposure to small cap and mid cap. Ideally, depending upon your age and the risk appetite, you should not have more than 15 to 20% exposure to mid cap and small cap. If you are young and you have a higher risk appetite, then probably you can increase it to more than 20%. And again, the important factor of creating wealth or higher appreciation through small cap and mid cap is not by trading, but by investing into those convicted companies and remaining invested for a longer period of time. Maybe you should wait till the complete cycle plays out. We are talking about the economic cycle, and then probably you'll be able to reap the highest benefit in terms of capital appreciation in those companies. Another way of investing into these mutual funds or ETF is through SIP. you can start SIP into all these mid cap and small cap, so that you can average out your price and you can get the better returns from these mutual fund schemes. Now we are open for Q&A questions, and I'll try to answer them as well. Radhika, thanks for asking for that PDF presentation. Definitely, I'll ask NISM team to share that with you. Damodaran, can you name some small cap and mid cap stocks for investing? I would refrain from recommending any individual stock, because first of all, I don't know about your risk appetite, your financial health, or any other your behavior, right? So probably I would not recommend any small cap or mid cap stocks for investment. I would advise that if you want to take a exposure, it's better that you invest into a small cap and mid cap stock through ETF and mutual fund scheme. Okay. So Nishant, what is a good way to track large institutional investors' involvement in small cap? Is there a public information available? Does any app or news agency offer this kind of tracking? So generally, all this information would be available on a NSE or BSE website in their disclosure. Generally, all the exchanges do disclose a bulk deal or block deal on a daily basis. And if you track that information on a daily basis, then probably you will find out that which institutional investor is buying a which small cap or mid cap company. And this all information is available on the NSE or BSE website under their block and bulk deals. So probably you can use that information to identify a large institutional investor which are investing into these small cap or mid cap companies. Delicia, yes, the recording will be available on the website of NISM, and within 3-4 days, you will receive a participation certificate from NISM, and the recording of this webinar would be available on the website of NISM as well. Namrata, of course, you have asked for explanation in Hindi. It's very difficult for me right now, but if you have any specific question, I'll be more than happy to answer that particular question in Hindi. Okay. So Sunita ji, you have a question. How can we analyze investable small mid cap stocks based on their key ratios? Okay. So to start with, first you'll have to understand, or you'll have to create that list of a top 150 mid cap companies and 250 small cap companies, which would be available on the website of Amphi, or you can refer to various mid cap indices. Okay, so that would be the starting point. Then you'll have to understand, if at all you'll have to analyze those individual stocks, right? Then you can find out the, or you can calculate the ratios based on a financial information which would be available on the, either on the company's website or on the stock exchange like BSE or NSE. Unfortunately, the ratios that you are talking about are easily available if you have a resources like Bloomberg or Reuters, which generally calculates this ratio and do share it with all the investors who subscribe to their services. Which option, Parma ji, which options is more safe, ETF or mutual fund? So we'll have to understand, even ETF is a product of a mutual fund only, but in case of ETF do track a particular mid cap or small cap indices, wherein the fund manager doesn't have discretion about a selection of a companies. In case of mutual fund schemes on small cap or mid cap, fund manager do have a discretion, and they can invest into any small companies which small cap company which may not be part of a small cap indices. Generally, they do have a discretion. Of course, that entails a higher risk and higher returns as well, but comes with a higher cost as well. That's why if you compare a fees or charges of a ETF would be much lower compared to any mutual fund scheme which offers or which invest into small cap or mid cap stocks. Vijayaranji, what are the most common warning signs of a financial statement fraud in small cap company? That's a good question. So if you want to first understand the warning signs of financial statement fraud, first of all, you'll have to understand generally how does the fraud comes up. They generally do overstate or show a higher profitability, but in reality, the cash flow is much lower compared to what profitability generally they show. So maybe if you can analyze the cash flow statement, a one thumb rule that you can consider is that cash flow from operation should be at least 60% of EBITDA that they are reporting, which means that, okay, if small cap company is reporting EBITDA of 10 CR, which is a operating profit, at least a 60% of that profit should get converted into a cash flow from operation. So one reason is that, okay, one factor or warning sign, if they have a lower cash conversion or lower cash flow from operation compared to what operating profit that they are showing. There are a lot of warning signs of a financial frauds which you can identify based on a financial statement. This is the one thing that I generally do track. Second thing, okay, the unsustainable debt levels that this small cap or mid cap company has. Generally, ideally, you should take a thumb rule that, okay, the debt equity ratio of those company should not be more than one. So basically, if equity is 100 rupees, the company should not leverage itself to more than 100 rupees, so that in case even if the business comes down, generally it can service the debt. Another financial statement fraud that you can identify is about a corporate governance or a related party transaction. Okay, generally all these frauds emerge from financial resources or cash being diverted from this business to the promoter's entity, and that happen through related party transaction. So I would advise to keep a close watch on related party transaction and understand what kind of related party transaction do promoter carry out, and is it necessary any small cap mid cap company with the lowest number or amount of a related party transaction will have a good corporate governance practice. Prasadji, your question is small cap mutual fund allocation in a portfolio by more than 15% okay when the investment horizon is more than 20 years? So Prasad, yes, see, it depends on individual's risk appetite, its financial wealth, and lot of other factors. We can't generalize, whether you should have a 15% exposure, 20%, unless and until I know your other financial obligation and other financial resources that you would be having. Yes, your time horizon of 20 years is a good long-term investment horizon. Harjendra, your question is that at this time there is a volatility in the market due to so many news, global news, local news, and rumors. It could be even rumor related to India-Pakistan war or anything such thing, right? What should I do to get more exposure and what would help in reduce risk? So we'll have to understand, if you increase the exposure to mid cap or small cap sector, your risk will increase and will not reduce. Okay, so I mean both things cannot happen, that you increase the exposure to mid cap and small cap and it will result into a reduction in risk. No, it will not happen. Nasirji, your question is what I have understood is instead of investing directly in stock in small cap, it's better to invest into mutual fund. Yes, that's right. But the catch is we are deprived of a bonus and dividends. Yes. So we'll have to understand generally when you invest into stock or capital market, it offers returns through two ways. One is a capital appreciation, and second is through higher dividends or actual dividend. So generally, when you invest into small cap or mid cap companies, these are all small companies and they generally do not announce a higher amount of dividend. So anyway, even if you invest into these small caps or large or mid cap directly, you're not going to or you're not entitled for that kind of dividend or bonuses. Okay, so it's always better to limit your exposure. And again, the objective of this exposure to small cap or mid cap stock is to get a higher appreciation or capital appreciation or higher return by way of a returns and not through a dividend. For that, you'll have to invest into large cap, which can offer you that kind of higher dividend, maybe for your monthly maintenance and for other requirement. Are mid cap and small cap prone to insider trading? Yes, of course. We have a prohibition of insider trading regulation, which do not allow any insiders from trading into capital market based on a confidential price sensitive information. But yes, they are prone to. And what measures do SEBI have for avoiding? Of course, they do have regulations for that, and the same regulations do apply for a large cap and small cap as well. Where Vishalji, where I get the data of up to date large cap and mid cap small companies? One way is to you should go to Amphi website and you'll get the complete list, updated list of a large cap, small cap, and mid cap company. Another way to get that information is by looking at the indices. Generally, the all indices and the constituents of those indices will give you idea of those companies. How long we should keep small cap for a good return? So it depends whether you're investing directly or through mutual fund. Suppose if you invest in those small cap or mid cap directly, then you'll have to take that call on your own based on the company's financial performance and the growth potential that it would offer. In case if you have invested through mutual funds, then there are mutual fund managers who will make that decision for you, and they might move out your money from a particular small cap and mid cap and would invest into another better small cap or mid cap companies. So they will take that decision for you. So, Dr. Prafulla ji, how can I believe on mid cap in long term return? So, historically, if we look at the performance, generally mid cap or small cap stocks do offer a 3 to 5% higher return than a benchmark indices like Nifty 50 and Sensex. And it has been historically proven that okay, these kind of returns do get rewarded. But question is that okay, should you invest into this directly? No. Of course, you should invest into mutual funds, and within mutual fund, maybe you can go for a flexi cap like a scheme wherein the fund manager will decide depending upon market condition whether they should invest into large cap, mid cap, and small cap, and which segment of the market offers them a higher return or return potential, large cap, small cap, or mid cap. So that decision will be taken by the fund manager. How to check the corporate governance of these small cap companies? What are the resources available to us? Okay, so there are no directly resources available, yes, but the information is available in a public domain. So take an example, corporate governance can be understood by the board itself. Okay, so identify who are the board members, what are their relevant experience to be remain on the board, and what kind of contribution do they contribute to the business. Do they have relevant experience? Second thing, have they attended all the board meeting? Do they have any kind of conflict of interest? Lot of these independent directors do receive a stock options or maybe sitting fees. So is there any kind of conflict of interest? Are they related to promoters through other ways? So this all information you will have to find out to check the corporate governance. Another thing that I suggested about a related party transaction, that information is readily available in on annual reports of a company, and from there you will get that information. How do we do a research of stocks? Is there any website? There are a lot of them. I mean, stock exchange do offer that. Similarly, screener website is there. So there are a lot of such kind of website as there. Trendline are there, right? So there are a lot of free websites are available for getting such kind of information. Is there Kamala ji, is there any timeline for small cap stock to become a mid cap and then into large caps? Yes, but there is no fixed timeline as such. You would observe that okay, lot of these maybe yesterday a small cap company became a large cap, sorry, a mid cap and then become a large cap. Lot of them are example. Take an example of Pidilite. At one point of time, it was a small cap or mid cap company and then become a large cap company. But as such, there is no fixed timeline when it can become a small cap to mid cap or mid cap, and there is no guarantee as well that all small cap company will become a large cap or mid cap at one any point of time. No, it depends upon their business performance. Tarini ji, your question is any portal or website that can provide very clean analysis about stock which must be genuine and trustworthy so that we can invest accordingly. So the two major resources is our BSE and NSE website that you can genuinely trust, and information provided on them is accurate. Other websites like Screener or Trendline, they do offer lot of resources, but most of those resources are calculated by them. So of course, safe to assume they would be accurately, but you must verify before making any kind of investment decision based on a data provided by them. How to find those stocks which are about to change the category, like they are reaching from small cap to mid cap and mid cap to large cap. Okay, so maybe there is no fixed thumb rule as such how to find, but maybe you can find or you can create a list of all those stocks which are from 251 to 255 or 251 to 230 260. These 5 to 10 stocks are likely to become a next mid cap companies, provided they outperform other companies of mid cap category as a whole, and couple of the companies do fall out from mid cap to small cap because the criteria or the number of companies are fixed. The top 100 will become a large cap, next 150 become a mid cap, and the next 250 becomes a small cap. So it's a universe of only 500. We'll have to understand that even if the company's rank is between 251 to 260, not necessarily it will go into mid cap, because there is a possibility of one large company IPO came up and it directly become a large cap because of the sheer scale and the size of that company. So not necessarily it will jump into mid cap company category automatically. You'll have to keep a track of its performance, and over a period it will fall into a mid cap or small cap company. So Saurabh how can we see related party transaction? See, it's a different, it can be a different session altogether on related party transaction. But if you open an annual report of any company and search for related party transaction, you will find enough disclosure about related party transaction in those table. So do look out for related party transaction. Mahendra ji, yes, mid cap and small cap stock generally do offer a higher return than large cap if we hold it for more than 5 years. Deepak ji, your question is large cap and small cap. Which which one is better for long term? Please reply. Deepak ji, it's not, there is no straightforward answer as in, whether large cap or small cap, which one you should go for. If I look at the capital appreciation, definitely small cap do offer a higher capital appreciation, but it also carries a higher risk. That's why we ask investor to have a exposure, but limit that exposure maybe to 15-20%, so that you will get that higher capital appreciation than a large cap stocks. How to find Snehaji, how to find those stocks which are about to change their category? Okay, I think we have already understood. What is the best way, Mukeshji, what is the best way to invest in gold fund or ETF, and what is the difference between? So I guess gold ETF, a lot of gold ETFs are already available on a NSE and do get traded quite actively, whether it's a benchmark gold BSE or Kotak Mahindra's gold one. All of the gold ETFs are readily available. So Pramodji, what is the long-term meaning for small cap fund? So there is no fixed rule as such, So as long as the fund is offering you higher capital appreciation and you do not require that capital for some other requirement, you should remain invested. Situnji, can I invest in stocks recommended by stock broking expert companies, as I have already invested and doing good? So it's always your personal decision, but I would advise that before you actually take that decision, you should take advice from your registered investment advisor and do ask him for his help in making that decision rather than taking that decision on your own. Snehaji, sometimes ROE, ROCE, etc. Every parameters are doing good evening, good are doing good. Though fundamentals of that companies are very strong, but still that stock are performing in very poor manner. Can you please advise? So understand, uh, if I look at a price performance, not necessarily price performance offer in a same linear manner in which companies' earnings are growing. But yes, at one point of time, when just like you have realized the profitability or the solidarity of that business, when other investors realizes and they start investing, that's when the actual capital appreciation or the price movement starts happening. So as long as the business performance of a company is good, the fundamentals and the cash flow of the company is good, you should remain invested. If not today or tomorrow, that price appreciation would happen. How do I decide when to opt out or stay invested when prices are dipping for a small cap and mid? So Ipsita, generally, I would advise that you should remain invested in any kind of small cap or mid cap company as long as the company's business is performing. You should not make that decision based on a price performance of a company. Unless and until the operational or business performance of a company is deteriorating, you should not move out of the good small cap or mid cap. You should remain invested. Atulji, I would advise that, okay, rather than investing into small cap and mid cap companies in a single lump sum account, it's always good to invest in SIP. What happened to said company got shut down? Okay. Kamlaji, please give one advice that you learn from your experience that many analysts don't know about, sir. See, I think if I look at all these, whether it's a broking house or other recommendation, they generally give a less importance to cash flow statement, which is the reality, and no can falsify that statement. So always give a most or the higher importance to cash flow. Second importance is your actual dividend payment. See, generally, if company is not generating a good amount of cash flow, it will not be able to deliver or or distribute a higher dividend. So always look or go for companies, even if it's a small cap or mid cap companies, which distributes a dividend to its investor. So distributing a dividend is actually way of sharing that wealth by promoters with other investors. So always look out for a investor or a promoter who is ready to share that wealth with other investor through a dividend distribution. Another is related party transaction, but that's the way, right, by which a cash flow from a business can be diverted into other means or through other entities. What are your major predictions about the investments and stock market if in case war happens between India and Pakistan? How it might affect the market? So it's very difficult to predict, right, what would happen. Even if it happens, right, how the market will take it, no one can predict with assurity. uh, because to a large extent it also depends upon the outcome of that war. Though we might expect that, okay, uh, we should win that war, but we don't know what will be the casualty of those war and what will be the cost of that war that our business or that our economy have to bear. So depending upon all that factors, the stock market will react to that war news or war. Atul Kumar ji, if anyone invests to targeted goal that for child marriage, that her child marriage, what is your suggestion till they gain return accordingly to assume a present ratio of return in percent? Can we compare this return to others guaranteed return after 20 years term? What will be high return or same as guaranteed return like? No, of course. If I compare Atul ji, the returns offered by small cap or mid cap funds, generally they are much higher than of course 3 to 5% higher than a large cap stock. But as I said, it also carries a higher risk. So we do not encourage our clients to have the complete investment amount in a small cap or mid cap, right? We generally recommend them that, okay, you should remain invested into a large cap, maybe a 60-70%, depending upon the age and financial condition of that individual. Maybe we should have another 10-20% in gold, and the remaining amount can be invested into mid cap or small cap. How to identify good fundamental stock? Mohanji, first of all, you'll have to understand the company in which that particular stock or business is operating. Okay. Number analysis and ratio analysis and other financial analysis can be a later stage. First of all, you'll have to understand the industry in which that particular stock or company is operating, understand the growth potential of that industry itself. So take an example, we all know that EV has got a great future in India. Semiconductor industry or hydrogen or renewables, all these are new sectors in India, new economic sectors in India. and all of them have a good potential or good uh, growth opportunity. Okay, so then you'll have to understand within that segment or within that sector why this particular stock should have a competitive edge over other players which are already operating, because this company is a small cap company. So if I compare a Shri Cement with Ultratech, I need to have a valid reason why and what competitive edge does a Shri Cement have over a Ultratech, so that Shri Cement can become a large cap company maybe in future. So you'll have to understand first the industry in which that business operate and the competitive edge of that company, why it will offer a higher growth potential over a next 1 decade or 2 decades. And then a ratio analysis or financial information will provide some more light on that kind of information to give you that kind of conviction that yes, over a period of time it will offer me the highest capital appreciation. Jabiullah, my age is 25 years. I'm ready to take very, very high risk. If 100% my money gone is also okay. Name any 10 mid cap and small cap stocks to invest. Okay. So generally that's what I say that, okay, we don't recommend that. But if you want to understand, you can refer to a mid cap, NSE mid cap 50 companies or or NSE small cap 50 companies. Probably they'll be the top 50 mid cap or small cap company, and you can invest into all those 10 companies to consider that kind of risk. Though I would not advise, but end of the day you can always take advice of your registered investment advisor. Satyamji, yes, SIP or investment in mid cap stocks through SIP is a very good strategy or would be the best strategy. Sandeep ji, which is a better indicator, technical or fundamental analysis? So it depends upon generally technical analysis being used for a short-term trading. Okay, so it really helps them in short-term trading. But if you are looking to remain invested for a long-term capital appreciation, then you'll have to rely on a fundamental analysis. Mayurji, I want to make my small case portfolio in SIP. Explain net 10 industry for future to invest in SIP. Okay. So generally, I have already named couple of new emerging industries like semiconductor, EVs, then green hydrogen, renewables, uh, even batteries. So these are all couple of new industries or new emerging industries in which you can explore, but not necessarily that companies operating in this company would be part of a small cap or mid cap indices. Either they could be a much more bigger, a large cap like NTPC Green or Wari Energy. They could be much bigger than that. Okay, Kamlaji, your title related to or your questions related to CFA, I think I'll share my number and my email ID. Probably you can reach out to me separately and we can talk about CFA exams, because this will not be a right platform, to talk about CFA exams and other. But definitely, if you look at my screen, I have shared my number and email ID. You can drop me a message if you have any query related to CFA. Okay, Satyam, so if I look at taxation part of a flexi cap fund, generally the tax treatment is quite same for whether it's a flexi cap fund or large cap fund. So there is no difference between a taxation when it comes to flexi cap fund or large cap fund. And any long-term capital appreciation or any uh, long-term capital gain on sale of flexi cap fund, right? would attract a 12.5% capital gain tax over and above 1.5 lakh rupees of a exemption. So, Snehaji, if you want to compare a performance of your mutual fund, 7 days will not be the right time frame, right? To compare a performance of mutual fund over a 7 days, right? You'll have to remain invested maybe for a year or two to compare its performance vis-a-vis benchmark. So we always say that, okay, uh, just investing into a mutual fund scheme is not enough. You'll have to keep on comparing its performance vis-a-vis benchmark. Suppose I invested into a DSE mid cap fund. I should not expect by virtue of investing into mid cap fund, it will outperform the indices. That's what you require your registered investment advisor who will carry out this research for you and will show you that, okay, the fund in which you have invested is not performing or outperforming even a benchmark indices, right? Then you need to switch to other fund or fund manager which is or who is outperforming the benchmark indices. So you'll have to keep on carrying out that research on a regular basis. That's why I advise that, okay, this is not a field for a retail investor who can carry out their day-to-day job and carry out this research as well. No, and you should take a advice or help of your investment advisor for carrying out this kind of analysis or research.
Hello,
Yes,
sir.
Mayurji, you will get a participation certificate in next 3 4 days from NISM. You'll directly receive an email along with your participation certificate. Guys, thanks a lot. We have already crossed a 5 p.m. mark, right?
Yes, sir.
So we'll end the session over here.
Uh, so we'll just wind the session, sir. Thank you, sir. I would like to extend our heartfelt thanks for taking the time to speak at our webinar. Your insights, expertise, and engaging presentation made a lasting impact on our audience. Thank you once again, sir, for sharing your time and knowledge with us. Wishing you a wonderful day ahead. Goodbye.
Thanks a lot. Thanks, everyone.